So Japan remains our top pick in Asia. We've been bullish for a long time, and I think it's a moment to celebrate actually finally kind of removing abnormal monetary policy accommodation and normalizing monetary policy. It's a sign that the policy mix that was put in place as long ago as 2012-13 has delivered. So we had over 5% nominal GDP growth in Japan last year, probably around 4% this year. And we're in a virtuous circle now in Japan of rising profits, rising wages, prices. It's all a virtuous circle, which is very good for equities investors.
So what kind of upside would you give to the market? I know that you've laid out a base case target for the broader topics and a bull case target as well.
Yeah, so our base case target is roughly where the market is trading as of right now. The bull case is 3,100, so that's about another 12% upside. That would require the multiple to be 16 times forward PE by the end of the year, looking forward to something like 195 yen of EPS for the end of next year. And that's increasingly coming into focus, that bull case target.
Some would say that that target is perhaps a little more muted than what we would have perhaps worked with a year ago because of rising wages and how some of the smaller companies, mid-sized companies, have not been able to pass that on, how that, if it comes to it, becomes a cost burden for them.
Well, the first target I set for topics back in 2012 when I took over coverage was around 850. So talking about 3,100, this market's already come a very long way. Indeed. And we have been raising our target persistently, whereas unfortunately for some other parts of our coverage, most notably China, we've actually been cutting our targets. So as always, it's a case of like taking a step back, trying to assess whether the thesis is intact, whether it's working. What I would say is that there's still some degree of skepticism amongst some clients. Some people who think that the profit improvement in Japan is only really to do with yen weakness. Yeah. The work we've done suggests that about 70% of the improvement is to do with underlying corporate performance. Only around 30% is to do with the yen moving to where it is now. And I do think that bottom-up story in Japan isn't sufficiently understood.
Right. They may have a point, right? Because I just carried out some analysis, and you had the export numbers come out, which were higher than expected at a growth rate of 7.8%. So exports are helping, and that tremendous weakness, some may call it undervaluation of the yen, is helping.
Well, again, over cycles in the global economy and indeed in the yen, we have this story of improving return on equity in Japan. Again, back in 2012, it was below 5%. We're now around 10%, and we think it'll be 12% over the next year or two. And there was a productive capex cycle in Japan that began in the middle part of the last decade. So these are companies that are performing well, and they're fully able to tap into global themes like the AI and semi theme that you're talking about earlier on your show. There's plenty of ways of playing that in Japan.
And you're saying that you don't see a strong decline in USDJPY pair. That's unlikely.
Well, at the moment, we are expecting $140 yen by the end of the year. It's currently around about 150. We've never subscribed to the view that there'd be a rapid appreciation of the yen this year.
No 130, according to you.
No, and essentially that's because the US economy and US rates are still, relatively firm. And so you're not going to get a narrowing of the nominal or real rate differential, not a dramatic narrowing. The kind of view that the yen would suddenly strengthen was predicated on the idea that the BOJ might exit accommodation at the same time the Fed was cutting rates aggressively, and that's not happening.